Hey, welcome back to the channel. In the last video we covered off my thesis on oil and why I'm bullish on the oil thesis. So you can go check out that video if you like to get an overview of why I'm confident in the price of oil going up in the future. In this video we're going to cover how am I playing that trade. For me, the main issue firstly we need to cover off is my approach is not fit for purpose for everyone. It's very high risk with the opportunity of also very high rewards. So on the risk spectrum, risk to reward spectrum, I'm on the higher, what you call it, right hand side, so I'm willing to take a lot of risk for a lot of return. So yeah, please understand this. If you want to play the oil trade, the energy trade, and you don't want to take the risk, just go out there and buy an index fund, buy an energy index fund, and you'll be absolutely fine. You'll make money and your volatility will also be less, but please keep in mind your rewards will also be lower. I'm mainly focused on oil services stocks. Here are my reasons why. So firstly, the service stocks are hit the worst in any bear market, and generally because of this they're also the most volatile to the upside. Second, stock prices are dirt cheap due to ongoing bankruptcies. A lot of debt has been wiped out of these companies. They've basically been bankrupt and they're really coming up from the ground up again with no debt or very little debt. Thirdly, one of the biggest factors again is day rates. I believe day rates have bottomed and they can only go up higher from here. Number 4 is that most of these companies are trading at replacement cost, so meaning that if you were just to take the net assets, and combine them all, it still wouldn't reach their current market caps. So they're trading at a very big discount. So let's take a look at the oil service stocks. So like I mentioned, services during a bear market is affected the worst, and we can see this from it. Like 10 of the largest publicly traded oil service stocks are down 77% since the start of the year in June 2020. You can see the chart there. The rig utilization has been declining since 2014, and yeah, because of that means that declining usage means declining day rates, which means less money for these companies, basically, which leads to bankruptcy, especially because a lot of these companies take out huge debts, huge loans to basically buy and construct some of these rigs. So because of all of this, a lot of these companies have gone into Chapter 11 bankruptcy, and what this allows them to do is restructure their debt. So a lot of the equity holders before this are basically wiped out. They're absolutely wiped out, and the debt holders become the new equity holders now. So you can see on the right hand side, a lot of these companies have wiped out a lot of debt, so their balance sheets are looking very strong and their backlog is great. So that for me is a very bullish sign. That's basically what it gives me is a margin of safety. Number 2, so utilization is on the up. So basically more of the rigs are being used. There is more demand for the rigs. That basically means that the day rates are actually climbing. We can see from a number of information online, like from these charts, that as utilization goes up, so does day rates go up. As you can see, day rates are now coming into the $300,000 a day. In the last bull market, the highest it got to was $600,000 a day, and these are coming off the lower lows of around the 200 level. They're now moving into the 300. I think we're even seeing some at the 400 level. And do I believe that it can surpass the day rates of old? I think like it doesn't need to, but if it does, that's great. If they get back up to what they previously were in 2013, it's gonna be nuclear for the stocks. So now, before we move on to individual stock picks, the last aspect we will look at is the replacement value of these offshore drillers. So this chart is fabulous, and it showcases that if we were to take the total fleet value of all of these companies and compare it to the EV of these companies, they're all below 50%, which is just showing tremendous values in the current price of these stocks, that they're not even at replacement cost, which I think is crazy. But anyways, next we're going to look at individual stock picks, and for us it's really easy. There's been a lot of consolidation in this sector. So there's really only a handful of stocks that we can pick, which is great for me and great for you, because that means less research for us. So I'm personally invested in these stocks. You can run with these names and do your research. Let me know what you think of them as well, but those are the ones I'm personally invested in. Yeah, and let's see, this trade is again 3 years, 3 years plus basically all of my trades at the moment are. So I'm going to be holding this stock for a while. Let's see how they do. Till next time.